Got an email from Tim in Barrie, Ontario. Wants to talk about Canadian natural resources. What are your thoughts on CNQ?
Look, the energy producers have been a little bit weak through the summer, and they've been strengthening in the last couple of weeks. We always spend time looking for companies that have been able to thrive through a difficult period. Maybe they make acquisitions, maybe they finish big capital spending plans. And, CNQ is one of those companies. There's a couple in Canada, I think, that look better than the group. Canadian Natural Resources is one of them. So, look, between CNQ and Suncor, these are two companies that have spent billions of dollars to put themselves in a position to generate cash. The spending's done. Transportation is an issue. But I think that it looks like the sector itself is catching a bid. In this next leg of the bull market, I would expect to see more of the cyclicals participating. And CNQ and Suncor both have outperformed the energy sector. So what makes it attractive, of course, is they've got a long life asset that doesn't decline like the shale producers. And so they should trade at a higher multiple. So I think these things are going to generate a lot of cash, and I think the CNQ probably looks pretty attractive.
CNQ, 3% dividend yield on that one. We have Al in Wasaga Beach on the line. What's your question, Al?
Good evening, Greg, David. My question is, I own Enbridge and Enbridge Income Fund. It's my understanding Enbridge is going to take over the fund. My questions are, I'm up on the fund and down on Enbridge. So should I sell the fund and put that money elsewhere, or should I sell them both?
Right.
And do you know what the price Enbridge is offering for the income fund shares? Thank you.
Okay, so Al, I'm going to address your first question, which is, should I sell one and move elsewhere? And I'll tell you, I really believe that the messaging in the market currently is that the sectors that are leading, and especially in the last few weeks, but really over the last couple of years, have been the more reflationary sectors, the ones that are more economically sensitive, the ones that are more tightly tied to economic activity. And the pipes really aren't that. So I'm not saying you won't make money. Enbridge is a really well-run organization. They've got a great dividend history. But what I would say is I would prefer to see you maybe move toward one of the U.S. financials, which really appear to be catching a bid. This time last year, U.S. financials really started to get a lift as interest rates on bonds started to rally, which benefits them, and they had really strong 6 months. I think you could start with a pretty strong 6 or 7 months in front of you and at one of the big U.S. banks, or something in the industrial space, and we'll talk about a couple of those today. But maybe hold the Enbridge, make a move on the fund, and diversify a little bit, because I think we are into a world where things that do better in rising rates are going to be what you prefer to hold.
Okay, and as far as the particulars of this one on my screen, each common share of Enbridge Income Fund will be exchanged for 0.73 common shares of Enbridge and 45 cents in cash per ENF share. So that's the breakdown of that deal. We have Chris in Hamilton on the line. What's your question, Chris?
I'd like to ask a question on Intel. It just seems to be hovering around the $45, $46 dollar level, and I just wondered what your outlook is for it, and if you held it, whether you'd continue to hold it or look at something else. Thanks very much.
All right, thanks, Chris.
Okay, so Chris, technology has seen some profit taking over the last 2, 3, 4 weeks. I think there were a lot of people, as the market was trading back towards highs, thought, oh, here's my chance. Market's back at the highs it hasn't been at since January, and took the opportunity to take some profits. Within the tech sector, semiconductors are highly economically sensitive, where, say, software isn't. Software is more defensive because it's recurring revenue. So I think that people were a little bit aggressive at taking some profits in some of the semiconductors. It's hard to believe if we've got another leg coming at us, and we have taken out the highs, I think we do, that the semis won't participate. Intel's paying you 2.6% dividend yield. You're going to get dividend growth. There's good share buybacks. It's a leader in the space. I'd be inclined to stay there.
Larry in Toronto on the line. What's your question, Larry?
Hi, good evening, gentlemen. David, can you please give me your view on Amazon? Thank you.
Absolutely. So, like Intel, Amazon's pulled back a little bit over the last, call it 10, 12 trading days. Amazon is a secular leader in a secular theme. And so I think you have to give this one the benefit of the doubt. We are shareholders. And I heard Jeff Bezos being interviewed today, and he said, you know, I don't believe entering any fight that's a fair fight. That's for boxers. He said, we enter businesses where it's not a fair fight. And realistically, that's what's happening. They are taking industries by storm, and it's hard to imagine they're anywhere close to stopping.
All right, Amazon, fascinating. Let's take a look at the street and what they have to say about that one. I think they like it. 47 buys, 3 holds, and 1 sell. Let's take a quick break. Be back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. Let's answer your questions about North American large caps, so give us a call, toll free, 1-855-326-6266.